Assalamu alaikum students, your instructor Abdul Rafi here. So today we are going to discuss bank reconciliation topic, bank reconciliation statements of AS level accounting, and it comes in IGCSE as well. So we'll discuss a complete 15-mark question and solve it. It's the recent paper, October-November 2020, paper 2 variant 1, okay, paper 21. So it's October-November 2020 as well, paper 21, bank reconciliation. So let's get started. So the question says that there is this person Noor is a sole trader, prepares bank reconciliation statements at the end of each month. So the first thing is that state 4 benefits to a business of preparing a bank reconciliation statement. So we need to understand the what is actually bank reconciliation statements. Basically, you try to check the errors what are made in your cash book and you try to reconcile with your bank statement. Okay, so basically we need to understand, students, that as you can see below, we have a bank statement as well, and we have the next page, we have a cash book as well. Okay, so these basically we need to tally them whether the bank reconciliation balance and the cash book balance are matching or not, okay, at the end of the month, at the end of the year. So the accountant needs to do that whether the bank statement that you have received and the cash book that you have made, are they reconciling? Their amount should be exactly matching at the end, and that's what we are going to do eventually by the end of this paper, that is C and D part. Okay, but you need to understand that this is the reason why bank reconciliation is made, because sometimes the bank, you are taking services from the bank, some money you are withdrawing, or suppliers paying, you are paying to your suppliers, and there is credit transfer, standing order, direct debit, bank charges. Sometimes the account will not balance. Okay, we need to understand the account does not balance because these are both opposite. Okay, so if the cash book is a positive balance, it means that this will be a credit balance for the bank statement. Okay, because if you are putting the money there, it's a debit for you, but it's a credit for the bank, right? If you are putting money, Noor is putting the money, let's say Noor is putting some receipts or withdrawing some payment, so it's the opposite way. If something is debit for Noor, then it will be credit for the bank, the bank statement and bank purpose. Okay, so that is the main understanding. So let's get started and let's write some points that what are the benefits of preparing a bank reconciliation statements. Definitely it will help identify the errors. Okay, so it will help identify errors in the cash book, it will help identify errors in cash book and the bank statement. Okay, so it will help identify errors in cash book and bank statement, so you can check, and it will help identify errors in cash book and the bank statement. It will help in preventing and identifying fraud. Okay, so it will help and preventing and identifying fraud as well, that you can write, that is a common point. Help prevent fraud and help prevent the fraud or identify fraud. Okay, if there's any problem in there. Okay, similarly it will help in preparation of financial statements. Okay, this definitely helps in the bank reconciliation statement, helps in preparation of financial statements as well. And also it will provide accuracy, and the cash book will be up to date. Okay, so accuracy and reliability on these documents. Okay, so preparation of financial statements helps in that, and then cash book up to date, cash book will remain up to date. You can also check different things as well, cash book remains up to date. Okay, so you can write this point, helps identify errors in cash book and bank statement. And any other thing that comes into your mind, we can discuss that. You can write in the comment section, and I'll let you know whether you can write this as a comment here, that 4 benefits. As a benefit here, that cash book will remains up to date, you can ensure that. You can also identify there is this dishonored check, that whether the check is dishonored, you bounce back, the date was wrong, the signature was wrong, or the person doesn't have that much funds that could be transferred. Okay, so you don't have that much funds available. So it can also help you identify out dishonored checks or the bank charges, how much bank have taken the charges. So you can say that bank charges, you can tally, you can see how much bank charges have done dishonored checks you can tally, okay, that whether there's a balancing figure, dishonored check, is there any. So a lot of things will help this bank reconciliation, because you are checking with you are compiling or you're reconciling the bank statement with the sir cash book. Okay, so next for 2 marks is a very important concept. These are definitions. So you have to state 2 differences between a bank standing order and a direct debit. I'm going to explain both of them to you. So what is bank standing order and direct debit? Also I'm going to explain a couple of more concepts as well, like just like credit transfer as well. So if we talk about the bank standing order, you need to understand that the bank standing order is basically when Noor will ask, so this Noor, the sole trader, when Noor will ask the bank, when Noor will ask the bank to transfer fixed amount of money on a specified date to a fixed person's account. Okay, so standing order is basically when Noor will instruct the bank, or when Noor will instruct the bank, or will give the instructions to bank, will instruct bank to transfer fixed amount. So the amount is fixed, to transfer fixed amount at fixed time and at fixed period as well, fixed amount of money on a specified date, or on specific date. Okay, you can say on a specific date it will be transferred, and as well as on specific date and to the fixed person's account. So it will be on a fixed person's account as well. So that is the main thing in standing order, that basically you instruct the bank to transfer the fixed amount on a specific date to a fixed person's account, and you do it every month or every year or weekly, or you do it every after 2-3 months. Okay, so that is what the standing order means. But if you talk about the direct debit, I'll write it in black. Direct debit is basically when Noor will instruct the bank to transfer, it will not be a fixed amount, it can be certain amount, okay, of the money, and it can be transferred to any person's account. Okay, and big direct debit payments, they occur irregularly. Okay, so direct debit is basically the same thing. It's basically the same thing. It's just the difference are that direct debit is when instructing the bank, when Noor will instruct the bank to transfer a certain amount, on some date, to transfer certain amount on some date is not also specified, to transfer some amount on certain amount on some date to a certain person. Okay, to a certain person, or to certain account. Okay, to a certain account. So the account is also not fixed. So that is the main difference that you can write, students. Okay, hope everyone is getting it. I'll give you very basic simple examples as well, so everyone gets the logic as well. Standing order is basically done for the normal expenses, the payments, the monthly payments, expenses. If you are paying someone the education fees, if you are paying someone some bills. Okay, so basically it will go in the same account. Okay, let's say you have some dealing with one particular customer, so it will be fixed. It every month you have to pay. So every month of 10th, the amount is being received to transfer fixed amount. The fixed amount is transferred, let's say $10,000, $1,000 on specific date to fixed person. And direct debit is occasionally they will occur certain, they will be based on irregularity. Standing order is being done at fixed intervals, and direct debit is basically the direct debit occurs irregularly. Okay, so that is what the main thing is. We can write this difference as well. I'll write it down, that direct debit, it will occur irregularly, that it will occur more often as compared to occurs irregularly as compared to the standing order, which is at fixed intervals. Okay, as compared to standing order, which is fixed intervals. Okay, so these are the points that you can write, students, and that is how you do all the theory part, that you got 6 marks on this theory. Okay, students, moving forward, we'll have to talk about the bank statement. The bank statement is given to us that the balance, as I said, that it will be a credit balance for the bank statement, and it will be a debit balance, the same amount. So the balance matching, starting balance is matching, but the ending balance is not matching. Okay, so we'll have to do it. So the ending balance, if we can see 139.39, and here you have something different. Okay, so the ending balance is not matching. So how do you do the numerics part? Let's talk about it. There are a couple of steps in solving the numerics part as well. Okay, students, so step number one will be to identify and cancel out what is basically, so step number one, I'll write it down here. So I have space here. So step number one will be to identify that what is correctly recorded, and step number two will be to identify that which things are not recorded. Identify and cancel out what is recorded. Identify and recording the what is recorded correctly. Okay, so the debit side of the cash book will be the credit side of the, students need to understand this thing very importantly. As I said that whatever you pay, it's the opposite for the other bank. Okay, so the debit side of the cash book will be the credit side. Okay, so let's start with different highlighters. We ignore the balance brought down, that is not the case. So let's see if you have done the sales. Okay, so you have made the cash sales 927.40. This is still there, so we cancel out. This is already recorded properly, correctly. Then you have 184.95. so do we have 184.95? We definitely have 184.95 as well. Do we have 841.61? That is a credit, so we have 841.61 as well, perfectly balancing. And so do we have 229.48? No sir, we don't have 229.48, which means that this amount is going to be affecting. Okay, so this is basically recorded. Follow very carefully. 229.48 is recorded, sir, in the bank statement, but it is not recorded in the cash book. So we are going to record it in the cash book later on. Okay, so that's why I've highlighted different. Okay, similarly, we are going to do the same there as well. We can see that this amount, let's use it the same color, 773.25 is recorded in the cash book balance, but it is not recorded in the bank statement. Okay, so 773.25, and the last one is the balance brought down. So let me just remove this for a while. Okay, so balance brought down, I've removed it, students, and this balance brought down, I'll also remove it. Okay, so because we don't need it at the moment. Okay, so that is the thing there, that we have distinguished that what is left and what is there. Same thing we are going to do here, that the credit side of the cash book is going to be the debit side of the bank statement. So let's start, students, this working as well. It's going to be 334.80. so do we have 334.80? Yes, we have 334.80, sir. 118.48, do we have 118.48? Yes, we have 118.48. so I'm making all of them with the same color because this is already correct. 723.21, that's also already there. 723.21, 723.21. 59.6 is not there. Okay, so 59.6 is recorded in the bank statement, okay, but not in the cash book, which means, sir, you will have to update the cash book. So 59.6 we'll have to do. Similarly, 172.8 is also not there, that is the direct debit. 172.8 is not there on the direct on the balance out there. And 1206.22 is matching, sir. So 1206.22 is matching with 1206.22. Okay, students, and the remaining, which means that will shade with blue, that remaining are recorded in the cash book, but they are not recorded in the bank statement. Okay, students, so eventually I'm shading everything with blue that we have to record. Okay, so everything that we have to record is with blue shaded now. Hope everyone got it. This is step number one. And step number two, that you identify and cancel out what is common, what is matching there, and then you identify that what is circle them, that what is not mentioned. Okay, now let's update the cash book, students. Hope everyone is getting it. So in cash book, we are going, this will be the updated cash book, and already the balance is given, that you are going to start with the closest balance. Okay, so 625.48. so you need to understand that we are making an updated cash book, so we will record those things that are not yet recorded in the cash book. Okay, we will record those things that are not recorded in the cash book, so we will take help from the bank statement. Okay, students, will take help from the bank statement. So it's going to be simple, that the bank charges you must have paid, and the direct debit to Aisha, you have made a direct debit to the Aisha for a certain amount, certain payment. So bank charges, and that will come here, and the Aisha will come here, because as we discussed, that the debit of the bank statement will means credit, or you can remember like this as well, but you already have the logic as well, students, that bank charges you have to pay, so that will be on the credit side. And similarly, 172.8 will also be on the credit side, because that's a direct debit to Aisha. Okay, which means you have made a payment, certain payment to Aisha, and that was not recorded in the cash book, but it was perfectly recorded in the balance in the bank statement. The next is that 229.48 is not recorded in the cash book, and that is basically a payment that we have received. So you are going to write it down, 229.48. You are going to write it down here in this account, 229.48, a credit transfer received from H Limited. Okay, so here I'm going to explain students that what is credit transfer. So students need to understand that, sir, credit transfer is basically if someone is transferring a certain amount of money directly into the business bank account, it is called credit transfer. So you are receiving the money, a certain amount of money you are receiving, and they are directly transferring into the business bank account. The bank statement will record it, but you will only get it when you at the end of the bank statement when you receive. Okay, so credit transfer is that when you receive the amount. So we are receiving from H Limited the credit transfer. Okay, students, so make sure write it down properly. And now you can balance off this thing by this is the only things that are required. So you'll get 4 marks if you do the proper balancing. Okay, so let's do the proper balancing. So here we go. I'm adding these. Okay, so closing out them, it's going to be 625.48 plus 59.6 plus 172.8, that is coming as 857.88. so I think it's going to be a negative balance, right? Cash book is going 857.88, and this will be also 857.88. so yes, you are going to have a overdraft here, I think, students, right? You are going to have an overdraft here. Bank is not positive, the cash book balance is not coming positive. So here we go, the balance brought down is going to be the negative overdrawn, that more payments are done as case of receiving. Okay, so 628.40, that is going to be the answer. Okay, so hope everyone got this, how we are going to make it and plan it, students. Next is also preparing a bank reconciliation statement at the end of year. Start with the balance as per the bank statement. So you are going to start with the balance as per the bank statement. So what is the balance per the bank statement? That is going to be 139.39, that is debit. Okay, so that's a negative value. Okay, so you're going to say that it will be, sir, 139.39, it's a debit balance, which means that the bank is already, the cash account, the bank account, Noor, is already, this person is already in overdraft. Okay, so 139.39. now what will come in the bank statement, sir? The bank statement will come that what you have missed out in the cash book. Okay, what is written in the cash book and not there in the bank statement, so that's what we are going to record it. Okay, so in cash book we can see that 773.25 was not recorded because this is debit, this will increase, so we are going to add this is 773.25 will be added, students. Okay, because this is an uncredited check that you have done the sales, but it's not showing in the, it is uncredited deposits. Okay, that you have done the sale and it's not showing basically in the bank statements. Okay, so uncredited deposits 773.25 will be added, and then you are going to subtract these two because these are the payments, sir. So 276, and you can do it directly, 276.93 and 985, so the checks that you paid that were not shown, so 985 point, you can subtract 985.33. okay, by saying that these are unpresented checks. Okay, unpresented checks are basically that you have made that you have given them the payment, it's not showing on the bank statement, it's not yet updated. Okay, so these are unpresented checks to these people, that is, one of them is basically J Limited and then the second one is Usman. Okay, so J Limited and Usman. Okay, so this is the information and this is the learning of these, that is uncredited checks and unpresented checks as well. Hope everyone is getting these information. Okay, I'll explain them again one more time so that the complete concept is there of this chapter. It's a very small chapter, so very small concepts are there. So I'm going to explain the concept as well. So first let's do it. Negative 139.39. So let's check whether it's balancing. 773.25 minus 276.93 and minus 985.33. So I am getting it as 628.4. okay, so I'm getting it as 628.4. that is going to be the balance as per the cash book. And if you see, students, we have balanced and it's merged, it's completely balancing off. So its balance as per the updated cash book as well. You can write these words as well, students. And I'll highlight so everyone can understand that you can check this question in the exam on your own if you have got the correct answer. Okay, now this is done, but still I'm going to explain the unpresented checks and the uncredited checks so everyone gets the idea. So what is unpresented checks? First, unpresented checks are basically these are the checks that must be issued by the NOR. Okay, so NOR must have issued these checks, but they are not present to the bank for payment, and hence they are recorded in the cash book because this I have made. So these values, so this is basically NOR have given them the check, but the people who have got the check, the company or Usman, they have not yet showed to the bank for the payment, and that is why they have not been included in the bank reconciliation, but they will have to be included in the bank reconciliation now. Okay, so it's basically the payments that by check that are made by the business, but they are not yet presented to the bank for the payment. Okay, and secondly, the opposite will be that these are the amounts deposited into the bank by the business, but they are still in the process of clearing. Okay, and hence they are not recorded in the bank statement, but they are present on the cash book, and they will be recorded on the bank reconciliation statement. That's what we have done. Uncredited deposits that we have deposited into the bank statement, but it is still under clearing purpose, so that is why you'll have to add them later on in the bank statement. So that's how in a nutshell bank reconciliation question is done. Always remember step 1 and 2 are basically identifying and cancelling out the common and seeing which numbers are not yet which statements and which transactions are not yet recorded in cash book and bank reconciliation. Step number 3 is updating the cash book, students, amended cash book, and step number 4 is the bank reconciliation statement drawing. Okay, so that's how this chapter needs to be done. It's exactly same as O levels, IGCSE and AS level. It's just the difficulty level that increase in this. Hope everyone got it. Thank you.